AMD is back in the spotlight after reporting its Q1 2026 earnings, and the numbers are turning heads across Wall Street. AI demand continues to surge, data center revenue is accelerating, and AMD is pushing harder than ever against NVIDIA in the AI race. But here's the real question for investors. Is AMD still an undervalued AI opportunity, or has the market already priced in the future? In this video, we'll break down AMD's Q1 2026 earnings, growth drivers, valuation, risks, and whether the stock still has room to run. AMD, or Advanced Micro Devices, is one of the world's leading semiconductor companies specializing in high-performance computing, AI accelerators, CPUs, and GPUs. Founded in 1969, AMD has transformed from a traditional PC chipmaker into a major player in data centers, artificial intelligence, gaming, and cloud infrastructure. Today, the company competes directly with industry giants like Intel in CPUs and NVIDIA in AI GPUs and accelerated computing. AMD's business is divided into four main segments: data center, client, gaming, and embedded. The biggest growth driver right now is the data center segment, fueled by strong demand for ePYC server processors and Instinct AI accelerators. Under CEO Lisa Su, AMD has significantly expanded its market share over the past decade and positioned itself as one of the key beneficiaries of the global AI boom. AMD has evolved into one of the most important challengers in the semiconductor industry, competing across multiple high-growth markets including AI, cloud computing, gaming, and enterprise servers. In the PC processor market, AMD continues to compete aggressively against Intel through its Ryzen product lineup, gaining market share with strong performance and power efficiency. In data centers, AMD's ePYC server CPUs have become increasingly popular among hyperscalers and enterprise customers, helping the company strengthen its position in cloud infrastructure and high-performance computing. The company's biggest strategic opportunity today is artificial intelligence. Through its Instinct AI accelerators, AMD is positioning itself as one of the few realistic alternatives to NVIDIA in the rapidly growing AI GPU market. While NVIDIA still dominates the AI ecosystem, AMD is steadily expanding its presence by partnering with major cloud providers and offering competitive AI solutions for large-scale workloads. Beyond AI, AMD also maintains a strong presence in gaming through its Radeon GPUs and custom chips used in major gaming consoles like Xbox and PlayStation. Overall, AMD's market position is built on diversification, technological innovation, and its growing role in the global AI infrastructure race. AMD delivered a very strong start to 2026, driven primarily by explosive growth in artificial intelligence and data center demand. In Q1 2026, AMD reported revenue of approximately $10.3 billion, up 38% year-over-year and above Wall Street expectations. Adjusted earnings per share came in at $1.37, also beating analyst estimates. The biggest highlight was the data center segment, which generated around $5.8 billion in revenue, growing 57% year-over-year. Strong demand for ePYC server processors and Instinct AI GPUs continued to fuel momentum across cloud and AI infrastructure markets. AMD's client and gaming segment also showed solid performance, with revenue growing roughly 23% year-over-year, supported by Ryzen processors and Radeon graphics demand. Meanwhile, the embedded business remained stable with moderate growth. Profitability also improved. Non-GAAP gross margin reached 55%, reflecting AMD's increasing exposure to higher-margin AI and data center products. Free cash flow more than tripled compared to last year, showing strong operational efficiency and healthy cash generation. Looking ahead, management provided bullish guidance for Q2 2026, expecting revenue around $11.2 billion, above analyst expectations. CEO Lisa Su also emphasized that AI infrastructure demand remains extremely strong, positioning AMD for continued growth throughout 2026. Wall Street reacted very positively to AMD's Q1 2026 earnings report. Following the release, AMD shares surged sharply in after-hours trading and continued higher the next day as investors responded to stronger-than-expected revenue, AI growth, and bullish guidance. Reports showed the stock jumping between 15 to 20%, marking AMD's strongest post-earnings reaction in several years. The market's enthusiasm was mainly driven by AMD's accelerating data center growth, which increased 57% year-over-year, alongside rising demand for AI infrastructure and Instinct GPUs. Investors also reacted positively to management's strong Q2 guidance and growing confidence around AMD's long-term AI opportunity. Another key factor behind the rally was improving investor sentiment toward AMD's position in the AI race against NVIDIA. Many analysts viewed the earnings report as evidence that AMD is becoming a more credible second player in the rapidly expanding AI accelerator market. However, not everyone on Wall Street turned fully bullish. Some analysts warned that expectations for AMD are now extremely high, meaning future quarters may require near-perfect execution to justify the stock's premium valuation. Concerns around competition, demand sustainability, and potential margin pressure still remain risks going forward. On Reddit and across retail investing communities, sentiment was overwhelmingly bullish after the report. Many investors described the earnings as confirmation that the AI infrastructure boom is still accelerating, while others debated whether the stock had already become overheated after such a massive rally. Now we are looking at a small portion of AMD's financial ratios for fiscal years 2025 and 2024. Starting with gross margin, AMD reported a gross margin of 49.52% in fiscal year 2025, slightly higher than 49.35% in fiscal year 2024. Gross margin measures how much profit the company keeps after covering the direct cost of producing its products. In simple terms, for every $100 of revenue AMD generated in 2025, the company kept about $49.5 before operating expenses, research and development, taxes, and other costs. The small improvement compared to 2024 may look modest, but it is important because it shows AMD maintained strong pricing power and product profitability despite intense competition in the semiconductor industry. Moving to return on invested capital, or ROIC, AMD achieved 6.7% in FY 2025, a major improvement from just 2.66% in FY 2024. ROIC measures how efficiently the company generates profit from the capital invested in the business. In other words, AMD generated $6.7 of operating profit for every $100 invested into the company's operations during 2025. This sharp increase suggests AMD's AI and data center investments are becoming significantly more productive and profitable. Free cash flow margin also improved strongly, rising to 22.81% in FY 2025 from 17.45% in FY 2024. Free cash flow margin shows how much actual cash the company keeps after operating expenses and capital expenditures. This means AMD converted nearly 23% of its revenue into free cash flow in 2025, reflecting stronger operational efficiency and healthier cash generation. Finally, AMD's interest coverage ratio increased to 28 times in FY 2025, compared to 20 times in FY 2024. Interest coverage measures the company's ability to pay interest expenses using operating profit. Simply put, AMD generated $28 of operating income for every $1 of interest expense in 2025. This indicates AMD's balance sheet remains financially strong, with very low debt risk and substantial flexibility to continue investing in AI growth and future expansion. Looking ahead, the biggest catalyst for AMD remains the explosive growth of artificial intelligence infrastructure. Demand for AI servers, cloud computing, and large language models continues to accelerate, and AMD is positioning itself as one of the strongest alternatives to NVIDIA. In the AI GPU market, AMD is also benefiting from rising adoption of its EPYC server processors and Instinct AI accelerators among hyperscalers and enterprise customers. Major partnerships with companies like Meta and large cloud providers could significantly expand AMD's long-term revenue growth. In addition, many customers are increasingly seeking alternatives to NVIDIA to reduce supply concentration risk, creating potential market share opportunities for AMD in the rapidly growing AI infrastructure industry. Despite AMD's strong AI growth, several major risks could pressure the stock going forward. The biggest challenge remains competition from NVIDIA, which still dominates the AI GPU market through its powerful CUDA software ecosystem and massive market share. If AMD struggles to expand adoption of its AI platform, growth expectations could slow. Another key risk is valuation. After the strong AI rally, investor expectations for AMD are now extremely high. Any slowdown in AI revenue growth, weaker guidance, or margin pressure could trigger sharp volatility in the stock price. AMD also depends heavily on TSMC for advanced chip manufacturing. Any supply chain disruption or geopolitical tension involving Taiwan could negatively impact production and deliveries. Finally, semiconductor demand remains cyclical. If AI infrastructure spending slows in the future, AMD's growth momentum and profitability could come under pressure. Now let's look at AMD's valuation, where the estimated fair value is currently around $214 per share. At the moment, AMD stock is trading at an overvalued level relative to this fair value estimate. However, following the strong Q1 2026 performance, several analysts remain highly optimistic that AMD shares could potentially move toward the $450 range over the medium term, driven by continued AI growth and data center expansion. Investors should remain careful and disciplined when making investment decisions, while fully considering both the potential risks and rewards. Overall, AMD delivered a very strong Q1 2026 performance, supported by accelerating AI demand, robust data center growth, and improving profitability. The company is increasingly positioning itself as one of the most important players in the global AI infrastructure market, particularly as enterprises and hyperscalers continue expanding investment in artificial intelligence. AMD's long-term opportunity remains very attractive, especially through its EPYC server processors and Instinct AI accelerators. Strong partnerships with major cloud companies and growing diversification away from NVIDIA could continue supporting future growth. However, investors should also recognize that expectations for AMD are now extremely high. The stock already reflects significant optimism surrounding AI, meaning future execution, margin expansion, and sustained revenue growth will be critical moving forward. In the end, AMD remains a high-quality growth company with massive long-term potential, but also one that comes with higher volatility and valuation risk. For long-term investors, the key question is no longer whether AMD can grow, but whether the company can grow fast enough to justify its premium valuation in the years ahead. This content is for educational purposes only and does not represent financial advice. Thank you for watching, and don't forget to like and subscribe for more insights.